Hello everyone. So in this video today we're going to understand the concepts of IPO, that is initial public offer, and then we'll understand the concept of FPO, that is follow on public offer. So just to give you a brief recap as to what all we've covered in the playlist so far. So in the playlist so far we have talked about the money market, that is we've talked about the market which enables short-term borrowing or lending, that is lending which is less than 1 year, and then we've covered the different instruments which entities can use to borrow and lend for 1 year. However, now we're moving to the next part, which is we're going to understand the capital market, which is we are going to understand how companies can borrow or lend for more than 1 year. So if entities such as companies or government, if they want to borrow for more than 1 year, the market which they can use or which they have to use is the capital market. So this is the market which is going to be the focus for the next part of our playlist. Now if you talk about the capital market can be divided into two components, which are the primary market and the secondary market. So specifically, if you talk about the primary market is the market which allows entities such as companies or the government to raise money from investors directly. So if entities want to raise money from investors, they use the primary market. Now once the money has been raised from the investors, and now if the investors want to liquidate the position, or if the investors want to buy or sell shares or bonds which have already been issued in the market, then they make use of the secondary market. Now we are going to discuss the differences between the money market and the secondary market in a greater detail in one of the videos of the playlist, but right now our focus is going to be on better understanding the primary market, which is the market through which companies raise money for the first time. So one of the ways in which entities or companies raise money for the first time is through the instrument of IPO or initial public offer. So let's say there is a company called Toral Pharmaceuticals. Now if Toral Pharmaceuticals has never raised money in the market and it wants to raise money from the public, then the mechanism which Toral Pharmaceuticals can use is that it can go for a IPO or an initial public offer. Now when a company has to go for an IPO, then the company does not go through the process of raising money from the public directly by itself, because the process of raising money requires a lot of financial and technical expertise. So what companies do is that they hire institutions which specialize in helping companies raise money from the market. So if Toral Pharmaceutical wants to come out with an IPO, then Toral Pharmaceuticals is going to connect with either merchant banks or investment banks. Now merchant banks or investment banks are entities which provide a host of financial services to companies, and one of the services they provide is that they help companies raise funds. Now in order to help companies raise funds, they provide multiple objectives, which is they help the company determine what is the type of security the company should issue to raise money from the investors. Should the company issue shares and provide the investors ownership in the company, or should the company issue bonds or debentures and take loans from investors? So merchant banks or investment banks enable the company to firstly understand the type of security which a company should issue. Then they also help the company better determine the price band at which it should offer its shares to the investors. Should a company issue shares for a price range of 90 to 100, or should the range be 120 to 150? So these merchant or investment banks gauge the market sentiments and enable companies to understand the price range at which they should issue their shares in the market. Additionally, the process of raising funds via initial public offering requires companies to submit multiple legal and financial documents to the regulator. So in our case, if Total Pharmaceuticals has to raise funds, then it will have to submit multiple financial documents such as audited financial statements or details about the different management personnel who are employed at different positions and their compensation, or it will have to provide information as to where the funds are going to be used once it is raised to SEBI. So in order to comply with all these regulatory requirements, you have merchant banks or investment banks. So this is the additional service which again merchant banks or investment banks provide to companies in the process of IPO. So clearly, if a company has to raise funds via an IPO, it is going to take use of these entities which are merchant banks or investment banks. Now the money which a company raises in an IPO goes directly to the company. So let's say Total Pharmaceutical has raised money in the IPO. So you have investors which are giving money to buy shares, and that money is going to go directly to the company, which the company could use for whatever objectives it may have. Now we are going to talk about the next concept, which is we going to understand what is follow on public offer. So if a company is already listed in the stock market, for example, Reliance Industries. Now if Reliance Industries wants to raise additional funds for whatever objectives it may have, then Reliance Industries is not going to go for an IPO. So a company which is already listed in the market, if it issues shares again in the market, that is called as a follow on public offer. So if a company which is already listed raises funds, again that is called as follow on public offer. And if a company is not listed in the market and it wants to raise funds for the first time, that is called as initial public offer. So these are the first two set of instruments which are used by the companies to raise funds in the primary market, that is the market for the first time. In the next video of the playlist, we are going to cover the remaining two primary market instruments, which are rights issue and private placement. Stay tuned and do check out the videos on this playlist. Thank you so much for watching.